Here's what our attorneys make us say. We believe all the information we offer on this program is factual and up to date. However, we cannot guarantee its accuracy, and you should not think of it as a complete analysis of the subjects discussed. We are also not giving you an offer to buy or sell the investments we talk about. All investments involve varying degrees of risk, and we cannot guarantee any specific investment or strategy will be suitable or profitable for your portfolio. Always consult with a qualified investment, legal, or tax professional before taking any action.
You've worked hard and saved for retirement, but remember, it's what you do with that money that really matters. How will you ensure that you wring every nickel out of your Social Security benefits? Could you pay fewer taxes in retirement? And how and when will you withdraw money from your IRA or 401k? Welcome to Secured Retirement Radio with Joe Lucy of Secured Retirement Financial. Joe's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal, and has nearly 25 years of helping people just like you. This is where you can count on straightforward and objective advice on how to make your money go further in retirement. And now, here's your host, Joe Lucy.
So, what do you think are the biggest risks that could threaten your financial security in retirement? Well, you know what? They're probably not what you think they are. Welcome to Secure Retirement Radio. I'm Joe Lucy. Joining me this morning, Ryan Dillon. And if you're recently retired or within 5 years of retirement, if you're in that red zone, we've got a great show for you this morning. When I say this word risk, when it comes to financial planning, most people automatically think of investment risk, the risk that your accounts will drop in value. And obviously, risk is a critical pillar of anybody's financial game plan. But what most people don't realize is this. There's a handful of other risks that can pose even greater threat to your financial security. Risks like, massive tax increases that can decimate a retirement account, skyrocketing costs of health care or long-term care. How about that risk of inflation? Or continued record low interest rates on CDs and savings accounts. We're going to be talking about some of these risks this morning because some of these risks that this generation of retirees has experienced is different than risks that our parents had, and they all can have a serious financial consequence to your retirement savings. So, coming up on today's program, we're going to share with you 6 of these hidden risks that can devastate a retirement plan, including an overlooked risk that can become your biggest expense in retirement. We're going to talk about why living long and healthy life is a blessing and a curse. Plus, the number one reason why you can go through your entire savings far too soon. So don't go anywhere. You know, as we go through this here this morning, let's start with the number one risk that if you've been a long-term listener here at Secure Retirement Radio, you know that we talk about this a lot. We're going to talk about the number one risk, which is higher taxes.
Joe, let me paint the picture for you a little bit here for the listeners. Higher taxes, number one risk coming up. We've got a $1.9 trillion spending package that's just about to come through. That's going to bring us at $3.8 trillion in the year 2021 already. This is putting the government on a path to spend more money in 1 year than we have in the last 200 years. Now think about that. In the last 200 years, this is before the Revolutionary War, before the Civil War, before World War I, before World War II, and before the Cold War.
All these risks are more than that combined. Now, you know, there's tax experts out there that are all heeding the same warning. There isn't an economist out there that doesn't believe that massive tax increases are probably right around the corner. Between the trillions of dollars of economic stimulus already passed, a $1.9 trillion stimulus that is in the books, future programs that we're talking about here, all because of this pandemic. We've skyrocketed the national debt to over $30 trillion. And we're all should be heeding the same warning that taxes, they have to start going up. The problem is, when a lot of us are thinking about our retirement planning, we're probably trying to figure out which is the best way to manage the portfolio. You know, that's the risk we think about. But higher taxes can be the real risk that we need to be thinking about right now. You need to start connecting how this means for your retirement plan. The only way to do that is to be looking at a comprehensive approach. Now, keep in mind, we've been talking here about the federal taxes going up. How about Minnesota? You know, just out of this week's Wall Street Journal, Governor Walz has called for creating a new tax income rate of 10.85%. Right now, it's about 9.85. Now, this is going to be for higher earners, but it doesn't stop there. We're talking about additional taxes around long-term gains. We're talking about additional taxes around qualified dividends. And even a 4% rate of additional taxes are. Look at your retirement picture today. Think about the planning you have. Is this a plan that's been built around investment strategies only? Is it about how to grow your wealth, or is it really about how to take your money back? How to make it tax efficient, how to make it last a lifetime. And the only way that this really occurs is by looking at how your retirement plan, how the future taxes that we're looking at, which could be, like I said a few moments ago, the biggest risk we have to worry about. You know, baby boomers, you probably remember 1981 like it was yesterday. In fact, I was just watching on Netflix. I'm catching up with some shows, and they got that Cobra Kai, which is going back to the Karate Kid. And it's actually a really fun show because you start thinking about, it brings you right back to where you were when you saw this show the very first time. But do you know that the maximum federal tax rate today is 37%? Do you know what it was in 1981? Do you know where the taxes were as you were graduating high school? I'll tell you that they were 70%. And then you had to pay Minnesota on top of that. Now, history has a way of repeating itself, and I'm not saying that Fed rates have to go back to 70%, but there is a huge difference between the top tax rate of 37% and 70%. And David Walker, who used to be the number one controller general, the number one bean counter under both Bill Clinton and George Bush, his projections are that we have to see an increase of at least 40% across the board. Now, taxes are at 40-year lows. But yet there's a promise by the administration that they're going to raise taxes. How much time do we have? I don't know. I don't know if we're going to have to see taxes increase in 2021. I think that with the pandemic, we probably have another year behind us. But as I've been saying on the radio program here for several years now, when the new tax codes, the ones that we are under right now, were passed, they put a provision in there that they would sunset. The provision says that they were going to end on December 31st, 2025. That means that without congressional action, and right now if you look at the way that the House and the Senate are structured, it doesn't take a brain surgeon to realize that there's a real good possibility that we are going to see some interaction here prior to 2025 or 2026. If that occurs, how much time do we have? Is it 2022? Is this the last year? Is it really the last year that you can start to do something around your taxes? And regardless of the reason, is it time to start bringing in tax planning into your own personal retirement planning? We're talking this morning on Secure Retirement Radio about 6 risks. But that first risk is not to be taken lightly. It's the real risk that we're going to see rising taxes. And unless you're bringing in tax planning into your retirement planning, you very well could be missing the boat. Because, as I've been saying, most people don't even realize this, but taxes are lower today than they've been in over 40 years. Many experts, most economists, are all heeding the warning. We're going to see massive tax increases to help pay for the trillions and trillions of dollars of economic stimulus and our skyrocketing national debt. We're talking about passing the next stimulus here in just the next couple days, and the market doesn't even act like it's really excited about it, does it? You see, because these tax increases are now right around the corner. Now, I'd like to make a special offer this morning just for the listeners here on Secure Retirement Radio today. You can learn how you can reduce or even eliminate taxes in your retirement. with what we call the Secured Retirement Tax Analysis. Pretty straightforward. Here's how it works. We're just going to gather some basic information from you. We can visit virtually. If you'd like to come in the office, we'll make sure we can do that in a comfortable way as well. But we'll gather this information, and then I'm going to bring it down to my lab. We're going to determine some specific, some tailored tax saving strategies that are best suited for your own specific situation, and many of you may not even be aware of them. Then we're going to sit down with you, and we're going to strategize. We're going to work with you. We're going to partner, and I'm going to be able to show you exactly how much money you could be saving with the look-forward tax plan. Now, I'm not talking about some simple deductions. I'm not talking about reducing 2021 taxes. I'm talking about some defensive strategies that can help you save tens of thousands, in some cases hundreds of thousands of dollars, and I think that we are seeing it now. We know that the opportunity to reposition our finances to take advantage of these are ending soon. The customized analysis, there's no cost, there's no obligation, and we're going to do it just for today's listeners here. So get your Secured Retirement Tax Analysis by calling today, 952-777-8838. It's 952-777-8838 because we got a very short window of opportunity, and if you're not bringing tax planning into your investment strategies, well, you don't want to wait. Give us a call, 952-777-8838, 952-777-8838.
Coming up next, we're going to talk about what is secrets of returns risk and how it could decimate your lifetime income. We'll explain how when we come back.
We're breaking in Ryan Dillon as our co-host this morning. I'm Joe Lucy, certified financial planner. Don't go anywhere. More with Secure Retirement Radio in just a few moments.
He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. And he's no ordinary Joe. You're listening to Joe Lucy on Secured Retirement Radio. Fasten your seatbelts and put your tray tables in an upright and locked position. It's another action-packed segment on how to make your money go further in retirement. You're listening to Secured Retirement Radio.
All right. So we're talking this morning on Secure Retirement Radio. We're talking about 6 risks. Now, when you think about risks, what's the biggest risk you think of when you're thinking about your retirement planning? What is that biggest risk that can threaten your financial security? Is it higher taxes that are no longer a likelihood, but probably a certainty? We got record low interest rates on your CDs and your savings accounts. We got the threat of rising inflation. How about retiring into a bad stock market, a market correction, a bear market, the next recession? Welcome back to Secure Retirement Radio. I'm Joe Lucy, certified financial planner. I got Ryan Dillon joining us this morning, and we're talking about 6 hidden risks that have to be on your radar as you're getting ready for retirement, because ignoring them can threaten the financial security that you're looking for. Coming up in this segment, why retiring in a downturn in the market or a bear market could decimate all your hard lifetime savings.
That's right, Joe. Today, the 6 hidden risks that could threaten your retirement. You touched on the first one there, taxes, right? We've all got to be bracing ourselves for the hit we're taking on the taxes. The economists and people are already heeding the warnings.
Well, in the 40-year, what we've had here, these 40-year lows, Ryan, they're going to end. In fact, the Wall Street Journal article says that it's not just on a federal level. It's the state of Minnesota that's proposing higher tax brackets, more tax on our dividends, more tax on our capital gains. Somebody's going to have to pay for the $3 trillion of stimulus that's already been passed, another 1.9 that's going to be going through here any moment. Yeah. It's for real. What's the second risk we wanted to make sure we talk about this morning?
Second risk we're going to tackle here in this segment is sequence of returns risk and how that can decimate your lifetime income. I mean, if you retire in a downturn in the stock market or a bear market, the combination of the stock market losses and the need to withdraw money out of these retirement accounts could decimate your nest egg. Retiring in a down market could mean you have upwards of 2/3 less income for the rest of your life.
And, we don't, for a while, for the last decade, let's go back to spring of 2009, which is really where the last recession ended. And all of a sudden we've been on what's been a pretty fun ride here for the last decade. And it wasn't really until, with a small exception, maybe a couple Decembers ago, but really it was this last spring that I think that all of a sudden we were reminded that the stock market has both bull markets, which we've been experiencing when the market goes up, and we also have bear markets. We have a period of time where the market fluctuates. And last spring, as everybody was locking up with COVID, we all of a sudden experienced this tremendous drop in a very short period of time in our accounts. And we were reminded again that the markets go up and they go down. The difference is this. You likely had income coming in. You had money coming in. You were still working your job. But imagine here that you didn't have that coming in. Imagine that you had to take money out of the stock market last March after we had just experienced this 37% drop. You had to take it out because of, well, maybe it was required distributions. Maybe it was because you had obligations. We had to spend this money. We talk a lot here on Secure Retirement Radio about what the term that I use is mailbox income. And this is the way that we have to protect ourselves. We have to be considering, how do I have money set aside that's not going to be exposed to these market value fluctuations? We're talking about money that hits the checkbook each and every month. It's mailbox income. It comes in regardless of what's going on in the 401k. Think of your Social Security. We talk a lot on Secure Retirement Radio about how we want to make sure we optimize that. And the reason why is because those families that have optimized their Social Security and have that money coming into their checkbook every month, the difference between taking it early and taking it and optimizing it can oftentimes be, 30, 40% more income. The difference between having a $40,000 a month income or a $60,000 a month income. And when you have a $60,000 a month income from Social Security, which is very tax efficient, by the way, and the market has its correction, it buys you time. It gets you runway. See, the families that have been hurt here the most through the market correction were those that ended up having to sell out of their accounts when the markets were down. Those that didn't have the runway. Those that didn't have, well, here's the thing. The market's been hitting all-time highs. It's taken a little breather the last couple days. It feels to me like this might be time to take another break. It's one of the last times. I mean, let's think about it. All of a sudden, we got to the spring and we passed the stimulus package, and another stimulus package came out. And as anticipation of that, what did the markets do? The markets were running up. And there's a lot of reasons for that. We had low interest rates. Low interest rates are good for the stock market, but if you haven't been paying attention, the 10-year Treasury is up substantially in the last week or so. The markets are starting to tell us something. And if you're getting ready to retire, if you're in the golden decade, if you're between the age of 59 and a half and 70, if you're going to start withdrawing from these assets, we need to start thinking about how we're going to protect ourselves from this number 2 risk, the sequence of returns risk. Retiring at bad time. Retiring into a market that comes down, and it's nothing we can do, right? It's not our fault if the accounts come down because the S&P 500 decides to take a breather. How do we protect ourselves? It's about making sure that we're focusing on income, mailbox income. Money hits the checkbook each and every month, regardless of what's going on Wall Street. A lot of times I see, when we talked about this in the past, there's really 3 levels of service that families are looking for. They're looking for financial advice. The very basic of this level is those that offer the essential services of retirement planning or financial planning. They give you the ability to buy and sell investments, whether it's a mutual fund or a stock. Think of your Robinhood account that everybody's been talking about. I can make a transaction, but nobody at Robinhood's going to tell you it's a good buy or bad buy. A lot of people saw a bad buy with maybe GameStop that came down. Then they sold out at a loss and they missed it going back up, and now it's going back to, But there's an essential level. The basic level of services is a group's, maybe it's a self-directed account at Charles Schwab or Fidelity, where you're making the buy and sell decisions and nobody's really giving you the advice. That's good. A lot of us we thrive in that capacity. The next level of service is where we might start to get some advice. We have an advisor that gives us a model. Let's put you into our aggressive model. Let's put you into our conservative model. It's now a model of different investments. And maybe it's somebody that gives you advice around your 401k. You're getting a little long in the tooth on those fixed income accounts. Let's start to peel back some of that, put more into equities. You don't have any international exposure. These kind of decisions. But for the most part, we got to fit into that template. We got to fit into the mold if we're working at that level. But there is a level that starts to look at the investment strategies and brings that together. It brings it together with things like we're talking about here this morning, these 6 hidden risks. It's that level that says we need to have a plan on how to reduce our taxes. It's that level that says, how do we make sure we can protect ourselves from retiring into a bad market? It's only at this level we start looking at comprehensive planning. And when we start looking at these different things that we're talking about this morning, these 6 hidden risks that can threaten our retirement security. Forbes tells us that many retirees are going to fund their retirement through IRAs and 401ks and their brokerage accounts. They rely on income and capital gains earned by their savings to achieve their investment goals. But nobody's sharing with them how to take this money out, how to take it back, how to make it last a lifetime, how to make it tax efficient. So that's why you need to find at this critical time, where we're at right now. Does it feel different to you? It feels different to me. It feels like we are now at a point that we need to start looking at this again. Because growing your retirement savings, while it's been fairly straightforward over the last decade or so, is getting more and more challenging today. You may not realize it, but the fastest and safest way to grow your retirement.
The Euros are here, and we'd better make the most of them because they only come around every 5 years. So if your bookie isn't making you feel special, then maybe it's time to find a new one. Yep, not so much carpe diem as carpa diem. If the grass is greener on the other side, come and play on it. If your bookie's not giving you the best rewards, switch and you'll get a completely free €5 bet builder on England v Scotland this Friday. Paddy Power!
Pre-match bet builder bets only. Max 1 free bet and in 2+ legs on an exclusive. Must have previously deposited. T's and C's apply. Play safe. 18+ gamblingcare.ie.
The savings right now would be by putting in a tax reduction strategy. That's right. By reducing your taxes in retirement, that's the safest and fastest way to help grow your nest egg. After all, the less money you put it out towards the IRS, the more money you get to keep in your pocket, right? That's why we've been making the special offer this morning here on Secure Retirement Radio, just for the listeners like you that are joining us this morning. We want to offer a way that you can dramatically eliminate or reduce taxes altogether in your retirement. It's with our free Secured Retirement Tax Analysis. Here's how it works. We gather some basic information. I'll bring it back to my lab. We will determine some tax savings, some defensive and sometimes very simple tax saving strategies that are best suited for your own specific situation. It's a tailored approach. We sit down and we share these strategies with you. And we want to show you exactly how much money you can save. Oftentimes, it's literally tens of thousands, if not hundreds of thousands of dollars. And there's no better time than right now to get the customized analysis. It's free. It's the Secured Retirement Tax Analysis. This is the only place you can get it, but there's no obligation once we share it with you. It's for today's listeners, so give us a call this morning at 952-777-8838. There's no cost. There's no obligation. I believe we're down to a short window of opportunity to take advantage of our current tax rates, which are at 40-year lows, and how to start protecting yourself from these 6 areas that we're talking about this morning here, these 6 risks that can hurt you. Call right now, 952-777-8838. Get your Secure Retirement Look Forward Tax Analysis, 952-777-8838.
After the break, the costs of health care and long-term care are skyrocketing. How could this impact your hard-earned retirement savings? We'll share the answer when we come back.
That's Ryan Dillon. Joe Lucy here. We'll be back with more Secure Retirement Radio in just a few moments.
He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. And he's no ordinary Joe. You're listening to Joe Lucy on Secured Retirement Radio. He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. You may not realize this, but he's kind of a big deal. Welcome back to Secured Retirement Radio with your host, Joe Lucy.
right. When you start thinking of this word risk when you're thinking of your retirement planning, most people automatically think of investment risk, right? The risk of your portfolio dropping in value, but there's a handful of other risks that can have even a greater impact on your retirement savings. The financial consequences of ignoring these risks can be devastating, and a lot of families don't even have it on their radar. It's not brought into their retirement planning. Welcome back to Secure Retirement Radio. I'm Joe Lucy. I'm a certified financial planner. I got Ryan Dillon joining us this morning, and today we are talking about six hidden risks that can threaten your financial security in your retirement. Now, coming up in this segment, why living longer. It's a blessing and a curse.
That's right. 6 hidden risks that could threaten your retirement. And our first, risk we talked about was taxes, and bracing ourselves what economists, are bracing us for. They're telling us already to get ready for it. Next, we talked about locking in those losses, sequence of returns risk, okay? Now we're going to talk about health care and long-term care risk.
And, when we think about these first 2 risks, we talked a little bit about how this opportunity to address these may be coming to an end. And as we think about this third risk, healthcare and long-term care planning, this may be one of the greatest areas of change that we're going to be experiencing over the next 5 to 10 years. We know that. We know that they're talking about making some changes. When we think about healthcare risk, Ryan, what's important to start thinking about?
Well, we got to ask ourselves this question, right? Can you afford to pay hundreds of thousands of dollars for your health care and retirement? Hundreds of thousands of dollars. According to Fidelity, a 65-year-old retired couple could be paying just short of $300,000 for health care and medical expenses. And this doesn't even include long-term care, Joe.
Well, and you know that long-term care is not cheap. It's something that, in fact, the U.S. Department of Health and Human Services, the federal government tells us this data, says that turning 65-year-old today, somebody that is now looking at starting Medicare, has a 70% chance of needing some kind of long-term care service. Doesn't mean you're going off to shady acres here. It just means that you might need somebody to come out and help shovel the drive or some things around the cleaning of the house or whatever these are. We all know these family members that are no longer as independent as they wanted to be. The problem is that these services aren't always free. Who's going to provide these services? Is it going to be your daughter or daughter-in-law? Is it going to be coming out of pocket? If we start to look at how we're going to come up with $300,000 of retirement out of our retirement assets for just these healthcare expenses, and we aren't looking at some of these other areas, well, this is very likely going to be the largest expense you have in retirement. Now, it's issues like these 6 hidden risks that we're talking about here this morning on Secure Retirement Radio, that I created what I believe to be the ultimate retirement checklist. This is a checklist of items that you can go through and just self-score. How are you doing? Are you thinking of these things? A lot of families, we have investment strategists. We have somebody helping us with building our portfolios, but who's making sure that we are looking around corners? Who's helping us make sure that we are looking at these things that we may not be getting from our current planning? That's why I created this checklist so that you can self-score yourself. Now, if you'd like to download this, it's absolutely free. You're going to get it immediately. Go to securedretirementchecklist.com. That's secured, past tense with a D. So securedretirementchecklist.com, and download this and score yourself. It's 31 areas that we want to look at. We're talking this morning about 6 hidden risks, and it's not just the risk of a market going down in value. A lot of us think of that, but it's some of these other risks, like the real risk that we're going to see higher taxes, a real risk that we could be retiring into the next recession. It's been a while, hasn't it? How about the risk of increasing health care, long-term care? What's the next risk, Brian?
Well, let's dive into it. It's a good segue. Healthcare, long-term care, right? The fourth risk we're talking about today is living longer in life than expected. Like you said, Joe, living longer is a blessing and a curse. We all wish we live a long life. But what if your wishes come true and you can't afford to pay for it.
We oftentimes share with families as we visit with them, Ryan, this concept of, these two stress tests, the asset test we all need to think about as we look at our retirement savings and how we're going to be able to spend in confidence. How do we maintain our lifestyle? And then once we get something put together there, once we document which of your money you should spend from first, how do we bridge any gaps that you might have between the optimization of your Social Security and pensions, and for those of you that have them, and the distributions from your accounts? How do we bring all of that together? And then the next question you want to start asking yourself is, God forbid, if I don't make it home tomorrow, how do I protect my spouse if you're married? How do I make sure that they can maintain their lifestyle? That's the first part of the asset test. But the next part is this. What happens, God forbid, if you make it to 120? Can the money stretch out? What about all the additional costs? We talked about long-term care. We talked about the increasing cost of healthcare. Ryan, you showed me some statistics on some numbers, and I found these absolutely fascinating. You talked about the increasing costs of healthcare, and you talked about how inflation here, since going back the last decade, total inflation has been an increase in the cost of buying power of about 20%. And I think a lot of us know about inflation. But what's been the cost of the increasing cost of healthcare?
The increasing cost of healthcare, inflation has gone 20% up, the last 10 years. Family premiums in that same time frame have gone up 55%. Here's
the number that's coming next that you need to be paying attention to. Ryan, what is the average out of cost expense for our healthcare?
Your out-of-pocket costs in healthcare in the last 10 years has gone up 111%.
When you think of something that's as important as your retirement savings, the retirement planning that you're going through right now, and when you start thinking about this, what's really important to you? Most families talk to Secured Retirement Radio here, and they'll share something along the lines of this. Joe, I want to make sure that we can retire and we can maintain our lifestyle. Not in 27 years have I ever met anybody that says I want to retire on a budget. We would want to retire and maintain our lifestyle. The second thing we often hear is something along the lines of, Joe, I want to protect myself from the increasing costs of taxation. We know with $3 trillion that's already been booked, another $1.9 trillion, let's call it 2, that's in the works, $30 trillion in national debt. We're going to have a national debt, and the repayment, the deficit this year is going to exceed our GDP for the first time since World War II. So they hire us and they say, Joe, show us how to take this money back, make it last a lifetime. Show us, number 2, how to pay less in taxes. And Joe, if you can, we'd like to increase our wealth, but we don't want to do it at the compromise of everything else. And the way that we help with that is we want to make sure we're looking around the corners. We look at these 6 areas of hidden costs, hidden risks. It's not just the risk of the market going down. It's the real risk of increasing taxes. It's a real risk of retiring at the wrong time into a down market. How about that risk of increasing healthcare costs? Is all of this in your planning? Is this something that you've already covered with your retirement planning? Because successful retirements are not built just on how much money you've saved. That nobody cares what the net worth statement is. The IRS really only cares about how these assets hit the tax return and how you have the ability to generate income from these resources, regardless of what they are: Social Security, pensions, savings. I got a special offer just for today's loyal listeners. We'd like to show you some strategies, some tailored strategies that can help you turn your retirement savings and investments into an income workhorse with what we call the Secured Retirement Income Analysis. It's absolutely free. It's customized. It's tailored for your own situation and your own specific financial goals. With the Secured Retirement Income Analysis, you're going to learn the fastest and safest way that you can increase your income that most people are overlooking. We're going to show you the key to protecting the principal from the rising risks on Wall Street these days. And if you can get even more out of Social Security, we're going to make sure we share that with you as well. The analysis is free. There's only one place to get the Secure Retirement Analysis, and that's by calling in right now, and there's no obligation. But you have to call today. If you're the kind of person that wants to make sure that your money's working for you, you can't afford not to take us up on this opportunity. The number is 952-777. 8838. That's 952-777-8838. Request your free secured retirement income analysis this morning, 952-777-8838.
When we come back, why record low interest rates and rising inflation can threaten your financial security in retirement.
He's Ryan Dillon. I'm Joe Lucy. More with Secure Retirement Radio in just a few moments.
He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. And he's no ordinary Joe. You're listening to Joe Lucy on Secured Retirement Radio. He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. You may not realize this, but he's kind of a big deal. Welcome back to Secured Retirement Radio with your host, Joe Lucy.
All right, so U.S. News, you know that magazine, they just reported that with interest rates near 0%, people retiring now face a daunting task of generating income from their portfolios that we haven't ever seen. Welcome back to Secured Retirement Radio. I'm Joe Lucy. I'm a certified financial planner. I got Ryan Dillon joining us this morning, and we're talking about 6 hidden risks that can threaten your financial retirement. It's not just the risk of a portfolio downturn. We're talking about 6 hidden risks that you need to be thinking about with your retirement planning. Now, there's no two ways about it. Generating income, which let's face it, without income, there is no retirement. So generating the income in your retirement years is more challenging today than it ever has been before. Coming up in our final segment, how record low interest rates can threaten and increase your risk of inflation, the loss of buying power.
That's right, Joe. But let's recap real quick what we did with the show today. So the number one risk we talked about in the beginning is taxes. Bracing yourself. We're at 40-year lows here. People are talking about taxes, the new administration. We're talked about sequence of return. Don't lock in those losses by drawing money out of these accounts at bad markets. We talked about healthcare and the costs that are associated with that. We talked about why people are living longer now. And in this one, we're going to talk about, again, low interest rates at banks right now.
We're going to talk about low interest rates and number 6, the increased risk of the loss of buying power and inflation. You know, interest rates on CDs and savings accounts, they've been at close to 0% since 2008. It's been over a decade. And they're not really projected to increase anytime soon. In fact, we've seen the 10-year Treasury go up and our interest rates at our banks have not followed. This, more importantly, is forcing retirees, or soon-to-be retirees, into only the stock market. Now, successful retirements, they're not built on the value of your 401k. They're built on the ability for you to take that 401k and bring it back to generate income that's going to last you a lifetime. Now, despite the interest rates, there are some surprisingly attractive options that can help you generate income in retirement. The thing is, you need to be bringing it into your retirement planning. Now, go ahead.
Well, are you talking, do you want to bring up the Bloomberg article or the Kiplinger?
Get the Kiplinger.
So the Kiplinger article, you know, in CDs, we're lucky to get 1.25% these days, right, for a 36-month CD. Bonds lately are similarly disappointing, just frankly. The good old-fashioned bank savings account or the mattress that you've been using, you know, for some people, the average interest rate, 0.1%, according to Bank Rate. Will you give safety? Well, you get safety, but not much else, right? With inflation, you're kind of almost losing money in that situation. Income planning is all about getting the most out of your hard-earned dollars, including having a withdrawal strategy for your retirement accounts. Mailbox income, as you like to say, Joe.
Well, mailbox income, the money hits the checkbook regardless of what's going on Wall Street. And when we're thinking about something as important as our retirement, it's about making sure that we've got our bases covered. It's about looking around the corner. It's about making sure that we are thinking beyond just what, whether I should be buying a large company stock or an international stock. Should I be buying more fixed income? It's more than just putting your money in the bank these days. You can't live on the 5% you were getting from your CDs. It's about how to take money back and make it last a lifetime. And that's why I put together what I believe to be the ultimate retiree checklist. If you're within the golden decade, if you're within 10 years of retirement, I encourage you to go to securedretirementchecklist.com, download the checklist, give yourself a self-score, because we're going to talk about these things. There's 32 points on the checklist. Many of them are going to pertain to these 6 hidden risks that we're talking about. And one, as we get into the remaining part of the show here, that we all have to keep on our radar is the real risk that we are going to start for the first time in many years seeing real inflation. You know, inflation, it's the number one way that I know that you can really lose buying power. It's where 1%, 2%, 3%, it just doesn't seem like a whole lot, but it starts to really add up. That's why Ronnie Reagan called it the silent killer. And here's some legislation that is on the books. Think about the retiree that's been living on Social Security here. We know that Social Security has a cost of living adjustment. For the last decade, it's been dismal, less than 2% in most years. And what they're talking about doing is taking that minimum wage and raising it from 7.5 to 15. That would be a 4% increase if we took it over the last 11 years. Now, the retiree's been retiring on Social Security earning less than 2. How do they make up that? How do you bring that into your retirement planning? How do we take the real risks that we're going to start seeing inflation? That's what this 10-year Treasury is telling us, as many economists are thinking, is that we could start seeing for the very first time some real inflation. Gas prices are already going up. We know that if we're getting ready to retire, if it's that important to us, we need to make sure we have all of our bases covered. We need to be thinking about how do I bring in all of these 6 risks into a comprehensive plan? How do I make sure I have everything covered? It's not just about investment strategies when you get to retirement. It's about how do I take those investment strategies, how do I coordinate them together with a plan to reduce taxes? How do I coordinate them with a plan that's going to help me get more mailbox income? Money that hits the checkbook regardless of what's going on Wall Street. And then if we can, we're going to grow that wealth, but not at the compromise of those first 2 areas. Because believe it or not, one of the best hedges that we have against all these risks we've been talking about today could very well be deciding when to claim your Social Security, because as CNBC tells us, it's one of the most important decisions you're ever going to make in your lifetime. It's for good reason. Because the difference between the best case scenarios and the worst case scenarios is oftentimes 6 figures. That's why I'm going to make a special offer as we end today's program just for you, the listener. You can find out how you get even more income when you file from your Social Security with a customized secured retirement Social Security analysis. I'm not going to charge you a dime. This is a complimentary offer just for you that are loyal listeners. We're going to show you the optimal time that you can get the most income from your Social Security. We're going to show you how to reduce or eliminate paying taxes on up to 85% of these benefits. We're going to show you how we can prevent you from making a decision that could end up doubling or even tripling Medicare premiums. Plus, if you're eligible, we're going to make sure you walk out the door for additional benefits that might be rightfully yours. Now, who's appropriate for this? Well, somebody that's not filed for Social Security. We're talking about old age benefits, those that you get at 62, not disability benefits. To schedule your free Social Security analysis, call us right now at 952-777-8838. That's 952-777-8838. You cannot afford to risk losing thousands of dollars in these benefits, and they're rightfully yours. So get your free secured retirement analysis right now, 952-777-8838. 8838. That's all we have time for on this week's program here at Secure Retirement Radio. We'll be back next Saturday.
He's a certified financial planner, fiduciary, and a contributor to the Wall Street Journal. And he's no ordinary Joe. You're listening to Joe Lucy on Secured Retirement Radio.